Hello everybody, I'm John with JP Strategic Investments, and today I'm going to talk about UWM's earnings and some interesting things within that report and their earnings call that UWM investors and Rocket investors alike should be pretty interested in. And also one thing that UWM is really banking on and could be the key to whether or not they continue to be successful in the mortgage industry or whether or not their business starts to decline. So let's get into these earnings. The first thing I want to start off with here is this share repurchase program that they announced. Obviously, anytime a company announces a share buyback program, anytime they announce a dividend, things like that, which UWM also does have, those are always good things, right? It usually means that one, the company has available cash, and two, especially in the case of a buyback, they generally think their stock is undervalued or could be undervalued in the near future. Which this current buyback is in effect for 2 years, I believe. So yeah, it will expire May of 2023. So it's in effect starting actually today and going forward for the next 2 years. So that is a positive for UWM there. The other thing that, even though they did miss actually on their earnings this quarter, I did get some questions whether or not that was maybe a sign that the ultimatum did negatively affect them. I don't really think so because, again, the ultimatum only really took effect at the very end of this quarter that they were reporting earnings for. So really probably didn't affect that quarter. We'll really start to see the effects of the ultimatum on Rocket and UWM in the next quarter, right? Because that is when the full quarter will have been affected. Well, mostly the full quarter, because both of these companies close loans fairly quickly, about 15 to 18 days or so. So we should see that full effect in the next quarter's earnings report. Now, they did give actually higher guidance than they did in this quarter. In this quarter, if we go to their closed loan volume, they had about 49 billion. Okay, remember these numbers are in thousands. So this 49, what looks like 49 million, is $49 billion. So that is actually lower, or their guidance for the next quarter is higher. It's the 51 billion to 55 billion range. So pretty good news there for UWM. The other thing, so I'll scroll up just so you guys can see this above my head here. They also, just like Rocket, do expect margins to decline. So if we go back up here to see where their margins were, let's see, where do we have okay, right here. Total gain margin was 219 basis points in Q1 of 2021. So 219 basis points, again, I've talked about this before. Not really a fan of the usage of basis points. I think it just makes things more confusing. Basically what this means is 2.19%. Okay, so when you think of basis points, every 100 basis points is 1%. Okay. So this is 2.19% that they did in this quarter, whereas in the next quarter, for their guidance, they're expecting between 75 and 110 basis points. Now, they did say that they were more closer to that 110 basis points in the last month or so, because the next quarter did start in April, so there were some questions about that from analysts on the call. They did say they were on the higher end, but they do expect margins to compress, as did Rocket. Now, the major difference here between these two companies, and this is where I want to play you guys a question from the call here for just a second. The major difference between these two companies is UWM is completely and solely a wholesale lender, which means they work only through brokers. So the broker is kind of the middleman between the mortgage lender, being UWM or Rocket, and the actual individual purchasing the home or refinancing or whatever transaction they're doing with the loan there. Now, Rocket has a retail side, which is direct to consumer, right? There's no middleman there. There's no broker. And they also have a broker channel. Now, one of the things that UWM's CEO really kept pushing on the call was the fact that the reasoning for this ultimatum was because brokers are better for the consumer. His argument was that the reasoning for only working with mortgage brokers who didn't work with Rocket and Fairway, was the other company, is because Rocket and Fairway are doing this direct-to-consumer lending, which they're offering the consumers a higher rate than they would the brokers, and that isn't fair to the consumer. And so the consumer should work with a broker because the broker can get them usually a slightly lower rate. Now, we're going to get into that and whether that really is an advantage and do some calculations in a second. But I want you to hear this answer or actually it wasn't an answer, it's the opening statements from UWM CEO on what they're looking for in the broker channel.
Now, let's look at the Q1 business strategy, understanding the business. So clearly we're the market leader in wholesale, demonstrated a 34% market share in the wholesale channel in 2020. We are going towards 50% mortgage broker market share for UWM in the channel. So that's our goal, 2025-26. We also want the mortgage brokers to be 1 in 3 mortgages. Right now they're hovering around 20%, a little less than 20% of the overall market. We expect that to go to 1 in every 3 mortgages. And if we can get half of those, we're going to win as a team together. Now,
so what I really want to focus on from this statement is what he said about the percentage of loans that are closed with brokers. Because this, I think, is really the key to whether or not UWM is going to be able to be successful going forward, or whether or not their business is going to decline and Rocket will be able to step in and take some huge market share here. So what he said about the brokers is that they're currently closing about 18 to 20% of the loans of basically all U.S. mortgages. So if you take all mortgages that are processed over a certain period of time right now, say that the last quarter, mortgage brokers are helping process about 18 to 20% of those loans. And now the CEO of UWM here is saying that they expect, or they hope, that brokers in the near future will be processing up to 33% or so, or 1/3 of the total loans, the total mortgages that are done in the next several quarters or so, something like that. Now, if that doesn't happen, then UWM could be in trouble. And especially if it starts to shift even more to the side of maybe brokers doing 15% or 12% or even less, then UWM could really be in some trouble because they only work with brokers. So they're in a way limited to the available market that the brokers are servicing. And if brokers are servicing a smaller part of that market, then UWM's available area to service also shrinks with that. So this is really important, guys. And so I really want to talk about, okay, whether a broker is actually more advantageous for a consumer, for an individual buying a home or refinancing a home, or whether a direct-to-consumer route is better. Now, I'm going to jump over to the mortgage calculator here. And this is, something that you can just pull up on Google. All of you can check this out, and you can mess around with the rates here, do some math. But basically, from the research I've done, again, as I said, the broker is kind of like the middleman, right? They kind of help the individual, the consumer that's buying the home, find a good loan. And they do have access to a much wider variety of loans than consumers do have access to. Again, UWM, for example, they only work with brokers. So if UWM can offer a better rate than Rocket, you're going to have to go through a broker to get that better rate. And there are several other loan originators like UWM that do only work with brokers, right? And so they do have broader access. They also just have more experience looking for loans and things like that, right? So there is a value to them. But what I really want to do here is calculate kind of the true value on a per loan basis with a consumer, what the broker is really actually getting you. Now, from the research that I've done, the average that a broker is really saving you right now is somewhere around 1/4%, okay? At the very most, I've seen maybe 0.5%, but that is in very few cases. Every loan is different. Everybody's credit score is different, which opens them up to more options, or if your credit score is lower, then you have less options, right? But from what I can tell, the average that a broker might save you is around 0.25% or so. So what I want to do is take just kind of somewhere around the average loan right now in the US, about $300,000, right? And really calculate, okay, if they were to save you about 0.25%, how much would that actually save you over the life of the loan, and how long would it take you to actually recoup the fees of the brokers? Because it does cost you to use a broker, right? And generally the fees can be anywhere from 1 to 2%. So what we're going to do is we're going to use the mid-range of the broker fee, which is 1.5%, and kind of the mid-range that they could save you, which is about 0.25 or 0.25%. And so if we take the kind of just average loan size, let's just say $300,000 here, and right now rates are right around 3%, okay? So for the average person, let's say they go to a retail lender like Rocket, they can get about a 3% loan, right? So 3% loan is going to, your monthly payment will be right around $1,265 a month, okay? Whereas if you did that with a broker, let's say they saved you 0.25%, so your rate was now 2.75%, okay? So now your loan is $1,225, right? Whereas before, it was $1,265. Now that's $40 a month that you're saving, which not bad, right? But keep in mind, you are paying that 1.5% fee on the $300,000, the total loan amount, to the broker, right? And it could sometimes be more, but again, it could sometimes be less. We're just using the midpoint here of all of those estimates. So what I'm going to do is I'm going to pull up the calculator here, get that open, and so 300,000, right, times 1.5%, we're looking at $4,500, okay? So that's going to cost you $4,500 to use that broker to get that lower rate. And remember, this is saving you $40 a month, right? So how long would it really take you to recoup that money, and how much over the life of the loan is it saving you, okay? So let's just look up, over the life of the loan, if we clear this out, $40 times 12 to get how much you're saving per year. That's $480 per year, and then this is a 30-year mortgage. So over the total life of the loan, it's saving you about $14,000 to get that lower rate, minus the $4,500 or so. So it's saving you about $10,000 over the life of the loan, which seems like, well, it is a lot, right? It's saving you $10,000, but there's a couple things that we need to look at here. So first of all, if we're saving $480 a year, right, that $4,500 divided by 480 per year, it's going to take us about a little over 9 years to get back our money from that broker, right? We spent that $4,500 initially, and now we're saving $40 per month, right? So to get us back to break even before we start to actually accrue the benefits of using that broker, it's going to take us about a third of the life of that loan. Now, most of you guys watching this channel, if not all of you guys, are investors, right? So you take that $4,500, right, that you saved if you didn't use the broker, and you invest that, how much do you think you could make in 10 years, even if you just throw it in the S&P, right? So that's something you have to think about there, right? If you invest that money, $4,500 over the course of 10 years, you could easily over double that. You could turn it into well over $9,000. and that's just, 8%. Okay, well, even if you only made 5% on that money over the course of those 10 years, you'd have about $7,000, a little over $7,000, right? And if you're good at what you do in the market, you might do even better. And so now, looking at that, especially if you're somebody who does invest your money and is decent at it, right? It's looking like the mortgage broker might not be the best route to go. And the one last thing you do have to take into account is a lot of times people refinance their loans, right? Whether it be because there's lower rates later on, or whether it be because they want to take money out of their house, or just they move and they get another house. The average mortgage really doesn't last that whole 30 years. Most people are refinancing within that first 10 years, if not within that first 5 years. So then you're working with a completely new loan. You have to go through that same process with a broker, pay them again, and you just went right back to where you were before, and now you have to wait another 9 or 10 years before you recoup that money. So in my opinion, it really might not be to your advantage to use a broker, especially if you're good at investing. And also, if you consider companies like Rocket that have a very streamlined process, everything is online. You can complete most of the process of buying a home, a refinance, managing your mortgage, all from your phone on an app. It's really easy. And honestly, using a broker really might not be the best thing for the consumer. And if people do think that is the case, if more and more people kind of realize that, or just go that route in general, that could be really bad for UWM and really good for Rocket. Now, if on the flip side, people are just like, I'd rather work with a broker, I don't understand the process and it's just peace of mind, which a lot of people, you could say, will go that route, then that could be better for UWM. But we'll really have to see. But I think that is kind of the key thing that's really determining who's going to win this battle here, whether it be UWM or Rocket. So I hope you guys found this analysis helpful. If you do have any questions, be sure to leave them in the comments below. Other than that, we'll see you next time and have a great day.